In this particular presentation, we'll be looking at salaries and wages adjustment. It's a common adjustment that you find almost in every um, income statement question, and you just need to know the way you adjust what to look at. To look at different ways the question can be asked. Into this question, it says you are provided with pre-adjustment trial balance on 31 December 2019. Right, and in that trial balance, right, salaries and wages as shown as 175,000. Then the adjustment, one employee was omitted. Right, you just have to make sure that is the omission, not the overpayment. Right, one employee was omitted from the salaries journal. Right, salaries journal, these are covered in grade 10. For December 2019, salary details are as follows: net salary 46,000, employer's contribution 9,800, deductions 14,500. Then it says employer's contributions is posted to salaries and wages. Right, this is very important. Right, we find that in some trial balance you're provided with the deductions account separately. Let's say there will be pension contribution, there will be medical aid contribution separately inside your trial balance. But if the question is silent, right, you're going to treat it as a part of the salaries and wages, the employer contributions. But if the question is specific, that or if inside the question you see that there is pension contributions, medical aid contributions, so whatever your calculations, whatever you get from this adjustment will go to those particular cost centers or accounts if they are given. So in this instance, now we are told that the contributions by the employer are posted to salaries and wages. Right, so how are you going to adjust this? So what you'd have, it's a simple salaries and wages. Salaries and wages, that's 175. Right, so this will be 175. That will be inline adjustment. And because in the income statement, when adjusting for salaries and wages, you adjust using gross. Right, so the gross here will be that will be plus 46,000 net plus 14,500. Right, that is deductions, then plus the contributions, since it says employer's contribution opposite to salaries, which is 9,800. Right, if you want, provided you won't make mistakes, right, if you want, what you can do, you see this part here. Right, sorry, I highlighted the wrong part. This part here. Right, what you can do, you can add the two figures. Right, that will be 46,000 plus 14,500. That's 50,500. No, 60,500. You can write this figure as the gross. So this will be the gross. That will be the gross salary. So you add gross salary in an adjustment. If you are subtracting, subtract gross salary. Right, that's what you need to know. So you need to add gross, not net. So if you're given net salary and deduction separately, we need to add the net salary plus the deduction. Remember, net salary is gross minus deductions. Right, so this will give you that's 60,500. that's 175,000 plus 46,000 plus 14,500 plus 9,800. This will give you a total figure of 245,300. So this is exactly how you write it in your income statement in line adjustments, right, which makes them simple. Right, so you see these amounts here, they will affect your note number 9. They will affect your note number 9, that is trade and other receivables. So when you go to your note number 9, right, that is trade and other payables. Right, you'll have your creditors, you'll have your accrued expenses, right, you'll have your deferred income or income received in advance, right. Then after that is you have credit for salaries. This is where you have the net salary of 46,000. Then you have I'm not quite sure what the contributions are. What are the employers' contributions? But let's say you have those employer contributions that are owing. If they are separated, that means you separate them, and I'll explain later on. Because if part of this is pension and there's pension here, that means you need to add pension from deduction plus pension from employer's contribution to get the total amount of the pension that is owing, right. Then so you have employer contribution. Then I will have here with the deductions now. On the deduction, remember I said here it will be pension, but the pension here, that will be pension of deduction plus pension of contribution, right. I will have maybe medical aid is the same thing, but then you have what we call pay, that is SARS pay, that will come from the deductions, right. So here there will be employer, let me say employer contributions here, let me say that was it will confuse this pension, then medical aid, there is UIF, right. There is skills development, right. So all those they will be owing here, so you put them in, and those will majorly be part of your employer's contributions, then pay. Then for pension and medical aid, you need to add the two, right, from deductions and from the contributions. So that will be your note number 9. Please, if you like this video, please make sure you do share it with your peers, and at the same time can you please subscribe and like the video and turn on your notification so that you won't miss anything that I upload. Thank you.